He gave his own trading bot $200 and stepped back. He had the resume for it: family office work in Switzerland and Singapore, and an agent orchestration platform he built himself. For almost a week, the money grew. Then it bled, and kept bleeding, until he called it a sinking ship and shut it off. His verdict: AI is superb at making research wider, deeper, and faster. But hand an automated agent your money and you want a professional running it. Hold that failure in your head, because its builders say it's only a few years out. By the end of this, you'll know exactly who still holds the trigger. If the expert's hands-off bot sank, what is everyone else running? Start at the bottom rung, where most people already are. Retail investors are wiring ChatGPT and Claude straight into their own research, analyzing markets and building homemade investing agents out of nothing but prompts. One story is worth pulling apart. He wrote his prompt in ChatGPT, ran it inside Claude as a hedge fund analyst, and asked it to hunt undervalued stocks on a fixed budget. Back came specific option plays with strike prices. He placed those contracts and says the trade made money. One person, one trade, his own telling, an anecdote, not a proof. And notice his rule. He read every recommendation and made every decision himself, because he believes a human level of discernment is always required. The AI is a tool, it never decides. So, the copy-paste crowd keeps the final word by default. What happens when a company engineers the agent properly? Climb a rung. Ivy, from a startup called Podium Markets, reaches across your brokerage accounts, reads what you hold, and tunes its analysis to the risk level you picked. It can see everything. It can touch nothing. You approve the strategy, you place the trade. Then there's Public, an online brokerage that shipped in-house AI agents into customer portfolios on March 31st, 2026, billed as the first brokerage to do it. Real accounts, real money. Same shape though. They run only inside the authenticated platform. Every workflow needs your explicit approval before it executes, and you can pause, stop, or edit it anytime. The company's own line: the agent will not have a mind of its own. These firms can build the execution. They're deliberately engineering the pause button in. Which raises the obvious question: if the technology can pull the trigger, why is nobody letting it? 3 reasons, and none are about model quality. First, language. Tell an agent to grow your portfolio aggressively, and you've said almost nothing. More volatility? A tighter concentration into fewer names? Options? Turning a vague human goal into precise instructions is unsolved. Second, blame. When an agent behaves outside how it was modeled, that lands on the firm, which delivers the regulatory wrapper protecting you. Third, money. And it cuts against the industry itself. Agents can trade far more often than any human customer, which could reshape brokerage economics. Autonomy isn't a missing feature waiting on better models. It's transferred risk, and nobody wants to hold it. Which brings us back to that $200 bot. Optimists here describe 3 phases, and the failure fits neatly into the first. Phase 1 is the science project. Plug a brokerage account into an AI, tinker, risk almost nothing. Phase 2 is agents inside real portfolios with real money, exactly where we're standing. Phase 3 is execution sliding into advice, colliding with human financial advisors. The pitch at the end of that road: an agent inside your own app that takes your goals, then runs tax loss harvesting, rebalancing, and options overlays around the clock. A 24/7 family office for everyone. Executives say a few years out, not 10. They're forecast, not a fact. So the $200 was never the verdict. It was phase 1 doing its job. Today's agents research brilliantly and execute nothing without your signature. and that gap closes one approval screen at a time. The question isn't whether AI can trade for you, it's how much of that last word you'd give up. If this changed how you see your money's autopilot, like and subscribe for more breakdowns like this one.